Hello and welcome. You're watching Ask BQ, a show where all your stock market related queries get answered. I'm Smriti Chaudhary and with me is Alex Matthew. Before we begin, I'd like to remind you that you can send in all your questions through any of your social media channels or through the WhatsApp number that's flashing on your screen right now. You can also send in your questions through the YouTube live chat. Now, let me introduce you to our guest for today. We have with us Mr. Mahesh M Ojha, AVP Research and Business Development, Hensec Securities, and Mr. Kush Bohra, founder kushbohra.com. Welcome and thank you for taking the time out. Now, before we begin, Alex, what are we focusing on today?
So there were quite a few options, Smriti. And by the way, welcome to everybody. And let me reiterate, you can ask questions on anything that is listed on the Indian stock exchanges at this point. Whether or not our experts have a view is another matter altogether. I can promise you that they will have a view on most of your questions. Now, the topic for today's BQ focus, we had quite a few options, as I was saying, whether it was the FMCG companies or in fact Bajaj Auto, which reported its numbers. But we decided to talk about Bajaj Auto, and not necessarily because of the results, but more so because of a change in its dividend policy. That, we believe, is the reason why the stock is doing quite well in trade today. So let me first toss it over to Mahesh. Mahesh, the question really is, how different will this make the dividend distribution for the company going forward? Based on our own analysis and based on what we have read from that surplus definition, at the end of FY23, Bajaj Auto had around 18,800 crore of surplus, which means that qualifies shareholders to receive the maximum possible dividend payout according to the new definition.
Yeah. Good morning, Alex. Definitely, the dividend policy changes is much better than any other things. And above surplus is above 15,000 CR, then the dividend is 70%. And if surplus is 7,500 to 15,000, then dividend is up to 70%. And below 7,500, then dividend will be up to 50%. This policy is extremely good. What market is expecting that this type policy is having very much good impact on the stocks and as well as the faith of shareholders. So particular result are also good, and dividend policy is impacting very well on stock valuation also. So if you look and on the result also, the reported Bajaj revenue growth of 1,008 billion, growth in 6% year-on-year higher, and on quarter basis 5% higher quarter-on-quarter. So both of result and dividend policy are better. So quickly we can say the stocks should re-rate from here. And what we suggest is stocks can re-rate for the 6,000 to 6,200 levels.
Okay, fair enough. Let's also get a technical check on the stock right now. Kush, what are the key levels to watch out for? I think you may just be on mute.
Classic. First up, Alex, thank you for having me on the show. Well, I kind of agree with Mahesh that, the stock could actually see higher levels of 6,000, 6,200 also. If you see, it's been a stupendous journey for the stock. And while a lot of auto stocks had sort of consolidated, this one, consolidated, but with a fair bit of positive bias. Today, we've seen an emotional gap up, as we like to call it, but it's on back of very good volumes. So I wouldn't be surprised to see that, if the stock in the coming days hits, even those, 56, 50 kind of levels as the first bump. On the downside, I think the gap up, which is close to 5,200. Now that is likely to act as a support zone. All in all, from an actionable perspective, if someone's got the position in this, don't be in a hurry to sell off. It's after a while that the stock's crossed that 5150 hurdle and the volumes are picking up, the momentum strong. The best way to play this would be with a trailing stop loss. So keep your trailing stop losses at 5,200 and ride this. The first bump, as I said, should be somewhere close to 5650, and once that is surpassed, I think 6,000 plus levels are also on the cards.
All right. Let's start out with the questions. The first one we have, and that's through email, is from Mohit Kumar from Delhi, and he's asking about Coal India stock. He has bought 40 shares of Coal India at an average price of 282, and he wants to know the outlook for the medium term on the stock. Mahesh, let's start with you. What are your thoughts on Coal India?
Basically, Coal India, we have already suggested about buying. Fundamentally, Coal India is very good strong stock. So basically, 350 to 360 level can be possible in near term. So if he is having position, then he can hold further with the stop loss of 270 to 68, and he can hold further. And fundamentally, there are a good stock, so he can hold the same.
Okay. Let's also take a technical check on Coal India. Kush, what's the view on the charts?
Well, across time frames, if we see the stocks actually seen a very sharp, run up already now, but that does not, mean that one should be in a hurry to exit this. However, a word of caution, there's something called a negative RSI divergence, and that is very clearly evident on the stock. And even if it's with the markets, we are seeing a bit of a pressure on the stock from the levels of 320 that it sort of touched yesterday, right? So my suggestion would be that hold this with a trailing stop loss. The stop loss level that I'm looking at, or the trailing stop loss that I'm looking at, is close to 300. Once that is breached, the stock could perhaps go into a near-term consolidation. But if it's held on the upside, don't be surprised to see 335 and 350 kind of levels also. So the way I would play this is with a trailing stop loss. I would ride the momentum. Fresh entry, as I said, I would avoid, but existing position, for sure, you can hold on.
Okay. We've got a senior citizen writing in from Indore, Rajesh Maheshwari, and he's got a question, a couple of steel companies. I will go to you on the fundamentals on this one, Mahesh. This is on Tata Steel as well as NMDC Steel. He has got exposure to both. He has 2,800 shares of Tata Steel at an average price of 105, and he's got NMDC Steel 600 shares as an allocation in lieu of NMDC. He's asking whether it makes sense to shift from Tata Steel to NMDC Steel with a medium-term outlook.
Basically, for steel sector, we are focusing on China also. China given a stimulus package, so some momentum for metal also started. So it's not advisable to moving the Tisco to NMDC, but we suggest to hold both the stocks. For Tata Steel, our target is 160, and for NMDC further he can hold for 10 to 15% upside in near term.
Okay, why don't we also get a technical view on both of these counters? And as was pointed out just now, Tata Steel still looks strong on the fundamentals, right, Mahesh? So
yes,
let's get a view on both. Kush, what does it look like?
So the fact that the view is medium term, so I'm assuming anywhere from about 6 to 12 months. From that perspective, it's not a bad idea to hold on to both. Actually, I don't see a fair reason to switch from Tata Steel to NMDC, which I suppose was one of the questions. Both these stocks are in a fair bit of an uptrend. It's just that because the global structure right now is so delicately placed. We've got variety of news coming from US and China, so hence you see a lot of volatility in the stock, which you can very clearly see in the price also. But if I just take a medium term view, both these stocks are in an uptrend. Since the buying price is about 110 for Tata Steel, he's sitting in a decent profit. I would suggest hold on to this one with the trailing stop loss of his buying price. And on the upside, we do see the stock going to about 140 to 155 kind of levels. As far as NMDC Steel is concerned, as I said, very similar view. On the whole, the structure is positive. The volatility in the stock is something that cannot be ruled out. I would hold it with a trailing stop loss at about 47 odd. And on the upside, we do look at levels of 57 and 60 in the coming months.
All right. Let's now look at the banking stocks. This next question is from Anchal, and she's from Jalgaon, and she says she has been eyeing for large cap banking pack. Now, the Nifty banking index has given up gains about 3% in the last month, and she's specifically talking about Axis Bank, ICICI Bank, and HDFC Bank at this point. Which one would be a good buy? Mahesh, let's go to you first.
Yeah, fundamentally we are preferring HDFC Bank, and bank also posted result also posted good one. So basically, for HDFC, if you are having 1 to 2 year horizon, so HDFC can give you better return than any other bank, because recently HDFC have opened many branches, so their number are subdued due to that one also. And this quarter result has been in line with street and above, slightly above than street expected. So we are preparing HDFC Bank for further target of 1,950 to 2,000 levels. So for Axis and ICICI, he can also add. There is also very good fundamentals, but from our perspective, HDFC Bank is better than Axis and ICICI Bank.
All right. So HDFC Bank is Mahesh's pick. Do you agree?
Kush.
Yeah.
It's all right. No, that's all right. Look, I'll probably answer this slightly differently. I don't think we were given a time horizon or the trading perspective on this one. So let me just put it this way: if if she's an investor and looking for a long-term perspective, then HDFC at current levels might just turn out to be an excellent buying opportunity from, let's say, 9 to 12 months kind of perspective. Although we'd probably see a quarter or two as to how does the stock react to the numbers, right? So I'll wait for accumulating it in a big way. But I think from a 9 to 12 month perspective, if you're an investor, HDFC Bank would be my pick. If you're talking about from a trading perspective, a momentum perspective, Axis Bank is something that we've had on our radar. We also recommended that as a part of our advisory service over the last couple of weeks. The stock's in a bit of a consolidation mode, I would say, but that is largely because the entire banking pack is feeling the heat. So Axis Bank from a trading perspective, and the levels that I'm looking for are 965 as a support on the downside, and on the upside we're looking at 1120 and 1020 and 1050 as the targets on the upside. So from a trading perspective, Axis Bank, and from an investment perspective, HDFC Bank. These would be my picks.
Interesting. Okay. And both frontline, HDFC Bank, of course, we've just had the results a short while back, and we had a detailed conversation about it. So viewers, hopefully you were paying attention when we spoke about it then as well. We've got a question coming in from Satish. He's asking about Cupid, and I'm hoping that you have a view on this counter, Mahesh. On the fundamentals, what would you say about taking a fresh position?
Fundamentally, we are not tracking much Cupid, but from technical perspective, it is better to, if he is having the position, he can hold further with a stop loss of 458 levels, and he can further target 520 to 540, 550 levels. So fundamentally, we are not tracking much Cupid, but technically, yes, he can hold further for the 540 to 550 levels.
All right. In case people weren't aware of this company, it's a manufacturer of contraceptives. It's a condom manufacturer. Let's talk about the technicals that you see as well. We've already got one view from Mahesh. But Kush, do you have any views on the charts for Cupid?
Sure. I mean, this stock was on our radar for a while because of the kind of sharp up move that we had seen. If we see, the stock was consolidating somewhere close to 265, and this wasn't too long ago. If you look at mid-July, the stock sort of broke out of the 265, 270 band, and then it's been on a one-way rise. Now at these levels, it's not such a screaming buy, because we're also seeing some sort of a negative divergence on the daily charts, and if I look at the weekly charts, the stock actually gone into an overbought territory. So my suggestion would be, if you've got an existing position, then the levels that Mahesh just mentioned, not a bad idea. 450, 460 are the zones where you have a support zone. So hold on to this one with a trailing stop loss. If you want to chase the momentum, again, not a bad idea, but I would then have my quantities, a little smaller, on this one, because as I said, we're seeing a bit of negative divergence and overbought on some of the time frames. So in that case, also, I would have my stop loss at 460. My immediate targets would be 510 and 525. But as I said, if I'm playing for the momentum, I would now have my quantities as, a bit smaller.
So, gentlemen, I think let me take this opportunity to ask about these relatively smaller counters, right? Because Cupid Limited, I'm looking at the market cap, and it currently stands at just under 650 crore rupees. Would you suggest, given the kind of environment that we're in right now, the question marks about global geopolitics, monetary policy in the US, everything that seems to be on the precipice of something happening, would you suggest that it's better to shield yourself from taking risky bets at the broader end of the spectrum, perhaps gravitate to the larger names? First you, Kush, and then I'll come to Mahesh on this one.
So, Alex, in all honesty, that's a brilliant question, given the kind of situation we are in and how someone should go about designing their portfolio. Look, from the way I see it, and I'll answer this slightly from a portfolio strategist perspective than just a technical analyst here. If you've invested in the large caps for the last year or two, your returns were at best, at par or maybe subpar. So that's one thing that's actually starting to hurt a lot of investors, who invest in the in the large cap names. Now, do we invest in the small cap names? Well, this you can. My answer is yes, you can. In fact, you must. But your quantities should be smaller, because yes, now you're looking at a market which is very dicey, very tricky, but only from the geopolitical perspective. If I look at the Indian markets, this is a market that's screaming to go higher. I was actually one of the few who was of the view that we could see new highs, around Diwali or maybe late November. So this market wants to go higher, and in that case, participating in the small and mid cap names is not a bad idea. But because the nature of the entire geopolitical setup right now is a little tricky, the quantity could be small, and once that that cloud clears, you could ramp up on the quantity there. So my suggestion would be have a mix of large cap and mid cap names, because a mid cap and small cap is where all the action is, and you want some safety from the large cap names. So I would have an exposure to some of these, but I would have portfolio allocations set right at the moment, perhaps just a tracking quantity, as I call them, and then as the cloud clears, ramp these up.
Sure.
All right. Next talk we're talking about is Indigo Pains. Now, Rashida wants to know about the long-term view on Indigo Paints. Now, from what I can see, it has given gains of 36% in the last 6 months. Mahesh, what is your views on the fundamental for Indigo Paints?
Fundamentally, Indigo Paints, he can hold. It's a 1,460 level currently trading. But no, both relatively sorry. Relatively traditionally painting season are starting, so we can see some good data from the paint industry also, and he can hold further, and we can look at the 1,750 to 1,800 level in medium to short term. So if you are having, he can hold 6 to 9 month horizon, and that level can be easily can become in this counter.
Okay. Quick other question. We've got Muiz that's writing about the healthcare space. I don't think there's enough information about Rainbow Children's Medicare, since it's a recent listing, to take a technical view. But I will come to you, Kush, on the broader healthcare space. In the meanwhile, let me take a check on the fundamentals for this particular counter. Mahesh, any view on Rainbow? Would you suggest a fresh entry?
Yeah, Rambo, he can, if he having, he can hold. But for further new entry, we are not suggesting. If he having, he can hold further. But Rambo for further, we are not tracking much fundamental for Rambo as a new entrance in the IPO. But if he is having, he can hold further.
Quick view on the healthcare space then. Kush, for you.
So Rainbow, is over a year now, and we've been tracking this counter, and we've given some momentum play calls on Rainbow, and God's grace, and the company is doing well. So they've sort of worked. Overall view on the healthcare space, look more towards the hospital, companies. For now, you can just ignore the diagnostic ones and some of the select pharma plays. So Apollo Hospitals, Rainbow, Krishna Institute. Some of these are the ones that we have on our radar. So hospitals are the ones that we'll be looking at from the healthcare space.
All right. Next up, we have a question from Navodeh Jain, and he wants to know about Bajaj Finance. Now, the results, the quarter 2 results, kind of met expectations of the street. Mahesh, what are your views on the stock?
Bajaj is a very good counter from last session. We also have discussed on Bajaj Finance. Bajaj is very good counter from our perspective, and he can fundamentally everyone know about Bajaj. That Bajaj is well diversified and multi stocks, so he can hold further for the 8,800 level target.
All right. What are the cues on the charts, Kush?
buy. I don't see a reason why not. A lot of a cloud is cleared from the geo impact and everything. The results have started to come in, fairly well. All the dips that we had seen, in the stock, be it 6 months ago or be it just 3 months ago, they've all been bought. And it's been, a rank outperformer and a wealth creator. Even now, we see, an opportunity to buy. However, in the near term, it could see a bit of a pressure. But otherwise, we don't see a reason to sort of not enter into this. So any dip for me would be a buying opportunity. Major support zones are 75.50, and on the upside, what I'm looking at are 82.50 and 8400 as the targets.
Okay. Gentlemen, we're completely out of time on this edition, so let me take this opportunity to thank both of you for taking the time and for answering all the questions that you did. Pleasure speaking with you as always. And viewers, thank you so much for joining in and for asking your questions. Hopefully, you've gotten those questions answered. Remember, we're live at 11:30 through the week, specifically to get all of your stock-related questions answered. So remember to tune in tomorrow as well. Thank you so much for watching. This is BQ Prime.